Hello and welcome to the Mortgage Minute, brought to you by Mortgage Power Network. I'm Chip Cummings and I'm back from vacation. Don't need these anymore. I tell you, it was a pain coming back because I actually saw snow when I got back. I'd much rather be down south. Thank you to all of you that sent well wishes and emails, and I even got a few limes in the mail. I understand my staff had a party while I was gone and a little bit of a sale. Well, there was a lot happening while I was on vacation. First, let's get to the rates. Where are the numbers? Well, the 30-year fixed average stayed the same at 5.88 for the last week, while the 15-year actually dropped to 5.42. We also saw a decrease in the national average of the 5/1 ARM down to 5.56%. Those according to Freddie Mac. But what about the foreclosure numbers? Well, these tell a different story. Well, lower rates alone aren't going to bail us out of this. We've seen mortgage applications go down, and a new report issued by the Wall Street Journal shows that mortgage delinquencies, those people that are 30 days or more late on their mortgages, have actually increased to 4.46%. We've also seen the new foreclosure numbers, and we've got a 57% increase from just a year ago. And the foreclosure number has actually risen now to 1.39% of all mortgages. Not great. But we look into the future. What's going to happen? What does it mean for your business? Well, the first one I want to point out is a survey that was done by PMI that shows that they're expecting a 20% decrease in property values through 2009. Worse yet, in an AP AOL Money poll, that shows that 25% of all borrowers out there think that prices are going to decline in the next year. So what can you do to safeguard your business? You know, with all the media reports and the industry news out there, you'd think the entire world was in foreclosure. Well, we just saw the numbers don't bear that out. But there are still people that need your help. Deals are being done, and you can make this one of the best years ever if you just have a laser-focused attitude on who your target market is. Here's another solution for you. Set up an 800 number, a toll-free number that people can call, and call it a foreclosure hotline. Partner up with a community center or a nonprofit organization, and a little bit of advertising will get that phone ringing off the hook. Now, it is true that you are going to get some of those garbage calls, but 15 to 20% of the people that do call in are probably people that you can help. More importantly, they can refer you to others who you can help. It's just one way to start beefing up your pipeline, and should only cost you about $40 to $50, including the advertising, on a monthly basis. Well, with all this talk of foreclosures, it's not surprising that our legislators in Washington have been quite busy. In fact, they were extremely busy while I was on vacation. The Senate passed a housing relief bill that the House is now taking up. Both of these bills differ slightly, but one common denominator is FHA reform. FHA is going to have to be an important part of any type of relief that we see. But let me give you the details of what this housing bill entails so far. $15 billion package over the next 10 years is what they're estimating that this could cost. Some of the important components include tax breaks for home builders and other service providers, a $7,000 tax credit for purchasers of foreclosed properties, and another $4 to $10 billion for cities and states to buy foreclosure properties. Now, while this may sound good on the Hill, it's not going to be real good for our industry. Here's another side of that they're not taking a close look at. Think about it this way. If the cities and states are given money to buy foreclosure properties, there's now an added incentive for lenders to let those properties go into foreclosure, knowing that the cities and states are then going to bail them out and buy those properties. The cities and states would then be responsible for the maintenance and upkeep on these properties, and more importantly, it's just another way that the government is bailing out the private lenders that are hanging on to these deals. Well, any solution that they come up with, of course, is going to have included FHA. And in fact, last week, Brian Montgomery, the FHA commissioner, was testifying in Congress, and he had a plan in order to help give some relief. The first thing he wants to do is expand the FHA Secure program. He'd like to take, and instead of FHA guaranteeing 100% of a loan amount, guaranteeing 80 to 85%. He'd also like to make it available to people that have been late on their mortgage payments. And here's how it would work. A borrower could be 2 times late in the last 12 months as long as they had a 3% equity position, and 3 times late in the last 12 months as long as they had a 10% equity position. Of course, then the remainder is going to be picked up by the lenders. And that's probably not going to be an easy pill to swallow, especially since we just saw another 1.9% drop in the pending sales index from the National Association of Realtors. So how bad is this thing going to get? What do you need to do to protect your business? Well, right now we've got an estimated $278 billion in credit losses. That number, according to the IMF, is going to swell to $975 billion before this whole thing is done. Well, right now many of you may be wondering, how am I going to make money in this industry? Is there even going to be an industry left to make money with? Yes, houses are still being sold, people need to refinance, and they need your help. What you need to do is, if you're experiencing PDD, or what I call pipeline deficit disorder, you need to get busy dialing for dollars. That's right. Here's one tip that can probably increase your pipeline by 2 to 3 loans over the next 3 weeks. What I want you to do is pick up the phone and call 10 to 20 of your past customers that you've closed loans for in the last 9 to 12 months. What I mean by that is we do what we call a 1-year financial physical, where we ask people about any changes in their personal lives, in their professional lives. Do they have any questions about what's going on in the marketplace? Do they know anybody, friends, family, associates that might have questions or problems about what's going on in the housing industry? You may be really surprised the answers you get. If nothing else, they're going to be real excited to hear from you, and you're going to create a lot of goodwill. But you should find that 10 to 20 calls per week over the next couple of weeks will bring you an extra 3 to 4 deals in your pipeline that you didn't have last week. Well, over the last few weeks, we've been taking a look at how each of the presidential candidates would propose to solve the housing problem. This week we take a look at Senator McCain's plan. Just last week he introduced what's called the Home Plan. And the Home Plan would require lenders to voluntarily write down the amount of their mortgage to give the borrower a 10% equity. So what would this look like in real numbers? Well, let's say that you have a $150,000 mortgage on a home that's only worth $100,000. The lender would voluntarily write that loan down to $90,000, giving the borrower that 10% equity. So what happens to the other $60,000? Well, that's where it gets a little dicey. It would actually be split between the lender, the government, and the homeowner. If that property ever sold for an excess later on, then the government and the lender would get paid back. Otherwise, they would take the losses. Sounds a little risky to me. We'll see how it shakes out when the final details come in. Well, that's about all the time that we have today for the Mortgage Minute. If you are serious about finding out the latest and greatest updates for the FHA Secure program, or how FHA can help you and your business, you need to go to FHA-lending.com and grab a copy of the industry's #1 training guide used in more than 40 states for continuing education. If you'd like to get an invite to all of our upcoming conference calls and webinars, then register today at ecoachingclub.com. It's fast, it's free, and it's easy. So until next week, this is Chip Cummings, and it's 5 o'clock somewhere, so I'm out of here.